What's up, everybody? Welcome back to Trading Wars. So today I'm going to do a video looking at the profit and loss for June, as well as the best trades of June as requested on my Twitter. And we're going to look at the first 2 weeks of June in this video, and I'm going to do the rest in another video. I didn't want it to go too long. So we're going to start off right away with the profit and the rules that I follow every day. So the rules are I follow my day trading playbook each day. So there's another video on YouTube that I did with the day trading playbook that tells you based on where we open how we should play the day. So is it a gap up, gap down, or inside day? I aim for 1 to 2 trades a day, and usually 1 trade only because I look for the best possibility, the highest win rate trade, and I take that and that's it. And yeah, again, I focus on the best trades only. I don't trade for the sake of trading. I trade when I know I have a statistical advantage only, and that usually happens in the morning. In the afternoon and into the close, things usually get choppy and they get very volatile, and I do not usually take any positions during that time. So I'm going to start off with looking at the profits, and then we're going to look at each individual day. So for the longs for the first 2 weeks of June, so everything is going to be based on the R system that I've already talked about. So we're aiming to make 2R per trade and risking 1R. So for longs, we would have had 12R up to the 12th of June. And depending on your account size, that's roughly 24% return for the first 2 weeks of June, which is huge. You cannot make that money anywhere else. This is why trading is so lucrative, but it comes with a lot of hard work and dedication. So depending on your different account size, this would be your profits. And we had plays for the short side as well, but it's a little bit lower in terms of return, but still overall profitable at 18%. And depending on your account size, this would have been your profit. So the goal, obviously, guys, is to build your account as big as possible in a safe, risk manageable way. And as you get a bigger account, you will also get bigger profits. So let's go right into the trades. So I'm going to start off with June 1st. So June 1st, we have an open inside of the previous day's range. So anytime I have an open inside of the previous day's range, I am very cautious because I know that the action will likely be choppy. However, if we do break outside of the previous day's range, I'll use the previous day's range as either support or resistance, or I'll use it as an opportunity to get back into a pullback. So in this case, we broke right through the high of June 1st. We had a pullback, and these are my typical trades that I like to take, these Fibonacci pullbacks that I talk about on my Twitter all the time. And we had a nice pullback to around 50 and 382. We held that area. So what we would do here is we enter above the high, stop right below this candle. So I usually try to put my stop as far in a place where I don't expect to get poked out. So it's usually below another fib level. So in this case, we had an easy 2R. There is no short play on this day because of the fact that when we broke out of the previous day's high, I use that as a really bullish sign. And I would have not taken any short trades. I would have looked to the left, and I see that the resistance is actually far away, so there's no point in taking a short trade. And in this particular day, I did actually enter long over here on a pre-market level of support. But for the purposes of this video, I'm going to be breaking down just looking at SPYs because I know not all of you guys look at futures. So moving on to the next day. So this day we had a slight gap up. So anytime we open outside of the range, especially in a gap up, I'm looking for a pullback into the previous gap fill area to act as support. So this is a play I did take where we had this 1, 2, 3, 4 waterfall action of red candles and closing into the previous day's gap fill. I took a long entry above the high, would have stopped right below the low, and took a 2R target, which ended up being the high of the day. And like I said, for the short side of the play, because we actually came to a major level of resistance, this was the actual short play. And in this case, one thing I want to mention to you guys is always wait for confirmation. So we clearly have a full bearish engulfing candle right at the previous resistance, and we take the short below the low, stop above the high, and that's a 2R play. So longs and shorts could have made both 2R on June 2nd. Moving on to June 3rd. So again, we have a gap up, but this gap is significantly higher than the previous gap. And anytime I see a gap up like this, I have a rule where I like to really play in the direction of the gap. So if we gap up, I really want to go long because that shows that the market is strong. That's why we gapped up. So what I like to do here is I don't really try to take as least amount of plays early on in the morning because usually it's pretty choppy when we have a big gap up. I wait for the low of the day to establish itself, and that usually happens within the first hour. Either the low or the high of the day will establish itself. So by the time we got to this point over here, I realized that the low of the day was likely in. And again, taking a simple Fibonacci from the high to low here, we had a 50% retracement right over there. So the entry was above the high, would stop right below the low of the candle, taking that up for a little quick scalp to our play. On the short side, again, guys, because I don't like to take plays in the opposite direction of the gap, I don't like to fade the gap. I like to play with the strength. There is no short opportunity. And if you did not take this play early on in the morning, I like to always set up these intraday fib pullbacks for the first 2-3 hour range. And in this case, we had a two test of 382 Fibonacci and a nice double bottom where we entered above the high, stop below the low, taking that for 2 hours into the close. Moving on to June 4th. So again, if you look where we open inside. And because we open inside, I know that right off the bat, it's going to be a difficult trading day because the fact that we're trapped within a range. So what do we do when we're trapped within a range? Well, we want to play off of the previous day's low and the previous day's high. So I'm going to draw that right now. So we have the previous day's lows over here, and we have the previous day's high, which is up here. So as we come into the previous day's high, you see that we get this hammer candle form here. And with this hammer candle form, because we're in resistance, we take an entry below the low of the candle because we know that's where all the stops are going to be, and we can keep our stop right above the high of the day. And that's an easy 2R quick play for the short size. For longs, because of this double bottom that formed later in the day, this was actually a play that I took and took a quick stop, lose 1 hour, and moved on. So it's not, your trades are not going to work every day, but when we lose 1 hour, which is 2% of our account, and when we win 2 hour, which is 4% of our account. So as long as you keep that strategy going, you will make profits in the long run. So moving on to June 5th, again, we had a gap up. Like I said, I wait for the first half an hour-ish to show me if the low of the day is in. In this case, the low of the day was in. We could have taken any one of these pullbacks over here to take 2R. And in terms of short, again, I don't like to play opposing to the gap. If the gap is up, I want to play long. I want to follow the direction of the strength. And moving on to June 8th, we had an inside day where we opened within the range. And like I said, guys, when we open within the range, I really want to be using the previous day's high and low as support and resistance. So let me zoom in on this. So we can see that we came up to previous day's high. The short entry was below the low of this candle, with a stop above the high. And unfortunately, there was no entry to, there was no ability for the shorts to make profits, and they ended up getting stopped out, which is fine. And you'll see when we go back to the chart with all the trades that as long as you're making more than you lose and you have a 50% win rate, you're going to make money, and that's all that matters. So in terms of the long, because we had this huge waterfall wedge action, and once we filled the previous day's gap right here, this entry is a textbook entry that I like to take. Because it's so late in the day, it's 10:30. I know around this time, the low of the day is trying to be established because the shorts who were taking a short up here could have been looking to make profits down here, and now hungry bulls are looking for an opportunity to get in. So this is a setup here for an easy 2R for the bulls. Moving on to June 9th, again, we had this inside day here. So the inside day, look, we're using the previous day's low as support. So we get this nice hammer candle here, and we have a nice waterfall action. So I'm going to zoom in here. So we can see this waterfall. The low doesn't break of these highs until we get here. So entry above here or stop below the low, and that's 2R. So I would not take this hammer over here because I do never take the breakout of the first 5-minute candle. That's one of the rules that I've tested because I know it's very volatile. In terms of short, so again, because we're inside, the only real short opportunity is if we play off a Fibonacci level. So we knew we had previous resistance right in this area before, and I'm going to take the close of the previous day, bring it down to the low of the day, and as you see, we get the 618 setup here. So when we take this 618 setup, entry below the low of this wick and a stop above the high. That's an easily 2-hour winner as well for the shorts. So both longs and shorts can make money, especially on inside days. And on the 10th, we had a Fed day, so I don't trade that at all because look at the size of these candles. They're just crazy. It's not worth the time. And then on the 11th, we had this huge gap down after the Fed day. So as a bull, you're looking for some type of setup on a gap down. You're looking for a double bottom usually. So in this case, we've taken this play, we got stopped out, and I put that as a -1R. And like I said, for the gaps, I like to trade in the direction of the gap. And because we had this gap down, we saw that there was this little double top that formed right at the top of the hour. We short below here with a stop somewhere above probably this 50% line over here. I didn't actually take the short play. I took the long play. Fortunately, got stopped out. But the shorts had a great opportunity to make money basically anywhere that they wanted. Moving on to the last trade that we're going to do for this video, which is the 12th of June. We had a inside day again where we opened. And like I said, I like to use the previous day's low as support. So as if you guys notice, like it doesn't always touch the level exactly, but once it's in the vicinity, that's and we get a reaction, especially like a doji candle, that's a signal of strength. So because we open inside, we're waiting for it to show some type of reaction at the previous day's low. We have this doji, we enter above the high, stop below the low, and we could have made 2R on this move. In terms of the shorts, so because you have this big impulsive move down, one of the styles, other styles that I use is the Fibonacci trading, where we had here a nice pullback to the 618, and we had an inverted hammer, a nice little short play here for 2R. So guys, there's always opportunities on either side to make money, but you need a playbook, you need a mentality of what you're going to do and the strategy of what you're going to do when you come into market each and every day. So when are there inside days for me, I look at the previous day's high and low as support and resistance. When it's a gap up or gap down, I like to play in the direction with the gap, and I like to use either pullbacks into the gap fill or some type of double bottom, double top setup, because those are very, very reliable. And we're gonna go through this one more time, guys. So look, you see, we do have losers. We do have no trades on some days, but this is the discipline that you need to actually make profits. If you go on a Fed day and you blow up your account, then you don't have an account to trade the next day. Or if there's no legitimate setup for a short play, then why would you take it? We want to take the highest probability setups only, okay? And this is awesome return for half of the month, and I'm going to continue with the rest of the month in a separate video because I don't want this video to go too long. And thanks for your time. Please comment, like, subscribe, and remember, less is more in trading, and focusing on the best setups are what's going to make you money in the long run. Okay, thanks guys.